Awesome, awesome. All right, very cool. Very cool. We're going to give it just a couple of more seconds here, get everybody signed in. Can I get a quick head count? How many people are here directly from TopstepTrader and a blog post that I wrote? Or maybe you've heard about me in some other way from TopstepTrader. How many people are here from that today, if you don't mind my asking? Get a head count on that. And while we do that, all right, cool. Several of you. All right, very good. While we do that, I just received an email here I want to share with you. This is one of our room members said, "Hey, Jason, I've been asked, you've been asked a bunch of times in the room talking about NinjaTrader 8. When are we going to make the switch? However, she said, I'm thinking about switching, want to make the change over to the market maker levels. They rock, and I simply cannot trade without them. I know I can draw them out, and of course, having them appear on my screen just so much easier. So I guess my question is, when are we going to be done? We'll talk about that here a little bit later. Thanks again for all you taught me. Hanging on to the targets helped me survive a recent week of only 25% profitable trades." And that's her doing her thing along with our market maker levels. But yet what I'm going to show you in here today is something that she's applying. And you can see that literally I just got this email 3 minutes ago, right? And so that's really cool. I thought I'd share it with you as we got started in here today. Just a really cool email from one of our customers who's just absolutely in love with our market maker levels. And I'm going to show you why that is the case here in just a couple of minutes. So again, it looks like everybody can hear me okay. We got a very full house in here today. I know time is valuable. I'm going to go through some of this stuff. I'm not going to be able to go into nearly all of the detail that some of these things require, some of these conversations require. But we're going to get to be able to give you a good general sense of good information in here today. And then I'm going to make you a really cool offer at the end of the presentation. So make sure you hang around for that. And let's go ahead and get started. So I know, again, the headline's always a crowd pleaser, right? They want to know how you've done in TopstepTrader combines and those kinds of things. And so in the month of October, I took a TopstepTrader combine that I completed both steps in the minimum amount of time required, which is 15 trading days, right? And so we did that, and I'm going to kind of detail out for you that information. Before I get started and while you're listening, if you wouldn't mind doing me a favor and just in the chat box up here, how many people have actually gone through a combine before? And if you have, if you've been successful, if you'll let us know that as well. We'd like to keep up with that information too. I'd like to hear about your time in a combine. All right, so how I pass the TopstepTrader combine, the 3 strategies I follow to achieve funded trader status in 15 trading days. We get a lot of guests in here, and a lot of guests that are go through and may or may not be familiar with what a trading combine is. That's why I was asking the question earlier. About a third of you actually came here directly from TopstepTrader. And so if you're not familiar with what TopstepTrader is, they are a firm that provides funding for traders. And one of the ways, or we'll talk about the ways that they do that, but one of the things here off their website is they call their trading combine, which is their testing program, a real-time simulated futures account where your trading is evaluated across 2 steps for the opportunity to get funded with TopstepTrader Capital. In this trading combine, you trade virtual futures in real time, proving your strategy in a simulated account with account sizes that range from buying power of $30,000 all the way to $150,000, right? And so those numbers sound really big and really cool. We're going to talk about that. We're going to talk about what the best way to select one of those combines is, kind of the parameters you want to follow. And I'm going to go through what I did in my process. The trading combine tests your ability to profit from the market and keep their capital safe over the course of 2 steps. So step number 1 is kind of the basic process. Step number 1 is your ability to demonstrate the basics of trading using the available platforms, and they have several now, NinjaTrader being one of them. They have Cunningham Trading Systems T4. They have Tradeovate, which is their own kind of white labeled program. They have a number of different programs. And your job in step 1 is just to prove that you can understand the basics of trading, using a trading platform, making profits, and controlling against a large drawdown. Once you get through step 1, they put you through step 2. Now, what step 2 is, it's a process where they clamp down on you quite a bit, right? So they say you could trade up to 15 lots on the 150K account. You could have a max drawdown of X $1,000 in your simulated account, etc. What they do in step 2 is they give you the same profit objective, but then they begin to clamp down in terms of showing your ability to consistently be profitable and manage risk. If you can complete both steps in as few as 15 days, you will earn a funded trading account. So literally, you can go from getting started to being offered a funded trading account in as few as 15 trading days. That's what we did, and I'm going to show you that process that we went through in the month of October. All right, so trading compound account sizes. Again, they range in size from 30,000 to 150,000. The profit targets range from $2,000 to $9,000. You can trade as many or in a max position size of 3 all the way up to 15 in the highest combines. And again, your daily loss limits range from $500 to $3,000. Now, one area that is a little bit of a concern for some traders in understanding is this max trailing drawdown. In the $30,000 account, it's $1,500 until you get to your $30,000 account, meaning that you can lose $1,500. But if you make $31,500, you can only lose back to $30,000, right? So it's a max trailing drawdown. And when you get to a certain level, and they have more details about this on their site, this is just kind of the high level overview. But basically what you're doing is once you get past a certain point on your account, you can't draw down back below the initial starting balance. And again, that's just a really good way, even if you're in your live trading account, to help you manage some of the risk that is associated with trading. Now, the profit splits for the trader, there are a number of different companies that do these kinds of things out here. TopstepTrader, I think, is the only one that allows you to have your first $5,000 at 100%, and then $5,000 plus at 80% to the trader and 20% to TopstepTrader. Now, as an example, if you grew your funded trader account to $10,000 in profit, your first $5,000 would be at 100%, and then the next $5,000 would be at 80%. So your first $10,000, you're actually making 90% of the profits, or $9,000. Now, I don't know how many of you have been entrepreneurial in the past or have had some kind of business arrangement where 90% of the risk goes to the other party and only 10% of the reward goes to that party, right? Usually if you're putting up all the risk, you're taking all the reward. And it's a very unique situation here that TopstepTrader provides to you to say, hey, we're going to take all of the risk and you're going to get all of the reward, right? We're going to take 90% of the risk in this case, of this example, and you're going to take 90% of the profit. That is a phenomenal way to do it. In fact, what we tell our traders when they come in, and they don't always do this, right? But what we tell our traders when they come to us is that the TopstepTrader Combine, regardless of whether or not you're taking actual money or trading their actual money, it's a fantastic way to get your feet wet and to get yourself squared away here initially with your live trading account, right? If you could pass their criteria in your live trading account, then you stand a chance to be super successful. But anyway, back to the profit splits here. 90% of the first $10,000 goes to the trader, and only 10% goes to the to Topstep, and they're taking really, aside from what you paid to get started, they're taking all of the risk. All right, how do you go about, I get this question a lot, Jason, how do you go about selecting the best trading combine? And so I have put together a list of criteria for your consideration to how you can select the best trading combine, right? And so here we go. The very first thing that we all look at, right, is what is the cost? Then you got to take into consideration, what is the profit target? What is the drawdown, the trailing drawdown? What is your weekly and daily loss limit criteria? And then the scaling plan, once you hit step 2 in the funded account, becomes an important criteria to consider as well. So let's take a look here. The monthly charges and reset fees for the $30,000 account is $150. And the reset fee, meaning that if you break some rule or violate some rule during the process, you can reset the combine back to 0 without paying the full $150 on the 30K account. You are still on the hook for the monthly consideration until you pass it, or you decide you don't want to do it anymore. But the reset fee is simply a one-time charge that helps you reset that combine back to zero. Now, you can see that from $30,000, it's $150 a month. Or if you want to go all the way to the max at the 150K account, then you are looking at a monthly fee of $375. All right, so profit targets and max contracts. Again, the $30,000 account, you have a $2,000 profit target. On the $150,000 account, it's a $9,000 profit target. And then, of course, you have your max position sizes that range from 3 to 15. All right, drawdown parameters. And I'm going through this stuff kind of quickly because I'm just kind of orienting people and guys and gals in here who've never heard of this before. I'm just sort of orienting them as to what we're talking about here today. So drawdown parameters on a $30,000 account is $500. That's really light. That's pretty low. On a $50,000 account, it's a $1,000 daily loss limit up to $3,000 a day on the 150K account. Your trailing max drawdown is from $1,500 to $3,000. So there's not a huge spread in those numbers, right? There's not a huge spread from $1,500 to $3,000 in terms of the account size. So again, this will come into factor if you start scaling in really aggressively. Those daily loss limits can get hit really, really quickly if you're not careful. Here's something interesting as well. When you are in step 2 and your funded trader account, you have a weekly loss limit on all of the combines except for the $30,000 combine. So for example, you can lose $500 a day, but not have a weekly loss limit on the 30K account. On the 50K account, you can have a $1,000 daily loss limit and a $1,000 weekly loss limit. So you have to be sort of judicious when you're in those combines, how much you're losing. And if you end up losing on a Monday $999, your best bet is to sit out the combine until Monday of the next week when that resets. And then, of course, you have the different parameters for the bigger account sizes. All right, so here we go. Here's the scaling plan. Now, the scaling plan is just simply what amount of contracts you can start based on the different funded account size that you're trading. And you can also increase those contracts based on certain benchmarks. So what I want you to notice here, it's sort of interesting. On the 30K account, you can start with 2 lots. On the 50K account, up to $1,500, you start with 2 lots. You start with 3 and 3 on the 100 and 150. So there's really not a huge difference there, right? There's really not a huge difference in those account sizes. And so one of the things that I run into when I'm talking to traders who are talking about taking these TopstepTrader combines, everybody is super enamored with that 150K account. Everybody says, well, that's the one I want to do, Jason. That's 150K. I'd love to be able to trade that kind of money. I could trade up to 15 lots. But look where they start you. At $1,500, everybody kind of starts in that same place, right? You go to 3 lots at $1,500. You can go to 3 lots up to $2,000. And then, of course, the scaling gets much bigger on the bigger account sizes, okay? So this comes directly off of their website, and so does this. So those are the scaling plans, but I want you to read this, okay? See that area that I have highlighted in red down below? In the funded account, once your cumulative profit is greater than $5,000, you can request adjusted risk parameters. So what does that mean? That just simply means that if you've been able to successfully generate $5,000 in the funded trading account, then you're going to have the ability to go to them and say, look, I'm in the $50,000 combine. It says I can only trade 5 lots. And let's say you're an NQ trader, right? And the tick size is what, $5? And so you want to trade 4 lots over there, but you want to trade 2 lots on the CL, or 1 lot on the CL and 1 lot on the ES. On a 50K scaling plan, you can only go to 5 lots. But if you've made $5,000 in your account, they're going to trust you to give you more in line with these scaling plans over here, right? They're going to do that for you. So if you can show you can make $5,000 in your trading, your live trading account, you can say, look, I want to go to 10 contracts because I want to trade 5, 3, and 2, right? 5 on the NQ, 4 on the NQ, 2 on the CL, 2 on the ES, right? And then I want to be able to add to the position when the market begins to run. This is an important phrase in this on their website for you to remember. It's an extremely important thing for you to remember, and here's why. So when you put it all together and you say, what is the best value, easiest to pass combine? All right. Here's how I've broken it down. The fee is obviously about half of what it is on the bigger combines at the $30,000 combine. So that check goes to there. The profit target is less at $2,000 than it is on the 50K at $3,000. However, your daily loss limit between the 30 and 50K is double, even though the account size is not double. Okay? So the weekly and daily loss limit, the daily loss limit is double. That gives you just some more room to make a mistake, right? Or to be wrong, right? And we know that you're never going to be 100% right in the market. We know that that's the fact, right? And so what this does is it gives you the ability to have a little bit more leeway without the profit target. So it's a 50% more profit target, and it's double the loss limit. So the winner in this category is the 50K account. The weekly loss limit, step 2, right, is there is no weekly loss limit on the 30K account, so check goes to there. The scaling plan, they're comparable, so I kind of split the difference there. And then your max trailing drawdown is bigger on the 50K account. So in summary, overall, the 30K and 50K accounts are the best value for the trading combines. Only $15 separates the monthly fee on the 30 and 50K program, and the 150 and 100K are double the monthly fees of these lower programs. Profit objective for the 30K is the easiest to obtain at $2,000, and the daily loss limit in the 50K is double that of the 30K. So there is more room for losses to make a mistake, right? There's more room for that. There is no weekly loss limit on the 30K account, so less restrictions are good. And the scaling plan consideration, both 30 and 50K allow you to start with 2 lots. The 100K and 50K allow you to start with 3. And while it is true you can scale more quickly in the 100 and 150K program, the catch is that you are limited by your max trailing drawdown. So yes, you could trade 10 contracts on the 100K max, but if you take 3 losses at $3,000, your Paris at 10 contracts on the CL, and you have a 10-tick stop, and you take 3 losses in a row, you have significantly cut down into your profit, and your max trailing drawdown is perilously close at that point, right? So remember that sentence that I told you? In the funded account, once your cumulative profit is greater than $5,000, you can request adjusted risk parameters. So why pay? Let me do it this way for you here, right? In the 50K combine, in summary, I prefer the 50K trading combine because you get the most of the advantages of the 30K trading combine with a slightly higher profit target. However, the higher profit target is offset by the increased room for losses. And while you are in step 2, the funded trader account, your scaling plan is more sensible approach, even if you were in the higher account sizes, right? So the question becomes, why, if you know that the profit target's easier, the scaling plan, you need to probably be following something a little bit more conservative until you get to about 10K. Why pay double the fee for the 150 and the 100K account? I know why people do it. They get super excited and energetic about saying, woo, I got 150K that I'm going to start trading. I could trade 15 contracts, and I get the emotional attraction for all of that. But at the end of the day, this program is designed and geared around having you manage your risk, right? Because one of the things we talk about in our trade room all the time, and one of the things you'll hear them talk about, the number one job of a professional trader is not to make money. The number one job of a professional trader is to manage your losses, manage your risk. Your number 2 job as a professional trader is to make money, right? And so if you always have that in your mind as you're going through it, the more conservative approach is a better approach, and you're only paying half of what the cost is for those bigger combines. Remember what I showed you on the scaling plan. They're throttling you down anyway till you get to about 5K, right? You're being throttled down in those live and those step 2 accounts. Why pay double the price, right? So for me, I prefer the 50K trading combine when I am going through it here. So I asked you earlier, and I see lots of questions coming in, and we're going to come through and get to these questions at the end here. So just be patient with me. One of the things that I asked, and I had a couple of people who were honest with me, and thank you for being honest. I said, how many of you actually taken a trading combine, right? And there's been many of you that said they had, and a few, more than half, have said they failed. Well, you're not alone. So there was a survey done on one of these review sites, trading room review sites. And now these figures that I'm going to share with you are from a third-party review site, and they're not Oil Trading Group customers, okay? But out of 163 respondents, people that responded, there was a total cost associated with these 163 people of about $185,000 is what they said that they spent. Right? That comes to an average spend per customer of $1,145 per customer, right? Out of these 163 people, 80% of those individuals were never able to actually pass the combine and or the funded trader preparation, and they moved on. So the trading combine is tough, not just from a let's get the setups right, but the mental and the discipline and the risk management that is associated with trading a combine is extremely difficult. And the 80% of the people responding here told us that they spent about $1,145, and then 129 of them walked away. So 163 people spent an average of $1,100, and 129 of them walked away without ever being successful. I want you to remember that stat as we talk about this here in a minute. All right, so I've gone through a number of trading combines in the past with TopstepTrader, and I'm going to show you a couple of them here. And let me see here. Give me a second. I'm going to have to bring this. I may have to come out of this so I can resume it. So give me a second here. Yep, I knew this was going to happen. It's going to happen to me. Give me a second. All right, I may have to shut this down. All right, so we're going to click save on that, and then I'm going to reopen it here. I knew as soon as I tried to zoom this that this was probably going to knock me out. So give me just a second here. All right, anyway, so what I'm going to show you here is a couple of trading combines that I've done. And in the past, I've also got to tell you that I became a funded trader at TopstepTrader back in 2012. So over the course of time, I have done a number of these trading combines in front of our live audience like we did in the month of October. So if you take a look here, let's see if I can get this to zoom in now. There we go. All right, so this was done back in January of 2015, right? And so I'm going to warn you now that back in January 2015, I was way more aggressive in these combines than I am today, okay? I was way more aggressive. Now, the market was much more conducive to us being aggressive, right? If you remember back to 2014 and 2015, we were having some really nice swings as the market was rolling out of those highs. But a couple things that I want you to look at here. This was a combine. 10 days were traded, right? We had 10 days traded. You see this up at the top. This was a 150K combine. I needed $9,000 to pass. Account balance will not fall below 150. You had to achieve at least 45% of your days were profitable. And if you look here, the account balance in that 9 days or 10 days was 191. I made $41,000 on this combine back in January of 2015, right? Average winning day 4,900. You look here, I had a winning day here of $18,000. Again, it's more contracts. The market was way conducive to these bigger swings. And that was really just, we kind of hit the sweet spot on that one. Coming back here into August of 2015, we ran another one, 9 days here. We made $9,100. And I've actually built a training course for this particular combine that I did. We call it 9K in 9 days. And you can see here that we had $9,000 in 9 days. We averaged, a winning day was 1263. The average losing day was 997. And I think I lost 1 day out of this particular run, and this was back in 2015. I've done others. I just wanted to show you how I've changed my mindset from these 150K accounts. So when I tell you the best one out there is the 50K account, it's because I've done them all, and I've done them all successfully, right? but the one that is the best is the 50K combine. So what I'm going to talk to you now is about our October 2018 trading combine. Roderick is going to throw this link into the main chat area. Okay, so here's some details about that combine. He's going to throw a link into this area so you can have access to this page. I'm going to refer back to this page, but here was step 1, completed in 5 days. If you click on one of these, you can get a little bit bigger view. You come back here. This was step 2, completed in 10 days. Here's the funded trading letter. And then I put together video reviews of 8 of those days, right, that had the biggest trades in them, that was the most important or impactful or powerful kind of trades, right? So what I do on these videos is I go through there and I'll tell you, this is what I did, this is why I did it. And then when you come back here and you hit play, right, you're going to come back here and I am going to show you the live feed from the room, right? So in this particular day, I was down ticks heading into this trade. I was short 2 lots, and this is exactly what it looked like and sounded like in the trading room. Now, I'll cut them down. Once I get past this opening little salvo here, I take that trade. Sometimes they last upwards of an hour. So I'll take those trades, I'll condense them, put some music behind it, speed up the tape so you can see, and then I allow you to see basically, right? So we do this, and there's some music behind it, and it kind of shows you where you can look up here to the P&L, right, and see where it is. And this is exactly what it looks like in the trade room every single day, right? And then we get to the point where you could see the profit targets and the trail stops being moved around, and you could kind of get a feel for exactly how that works. All right, so that's an important thing to remember. This page is an important page because it is going, and I'll be referring back to it here, but you're going to be able to see the detail of this trading combine that we did in October, where we passed the funded trader we passed the funded trader from 0 to funded trader in 15 trading days. All right. So I'm going to start with the good news, right? Here's the great news, right? If you look at the date on this, it was Monday, April 22nd. Congratulations. Your account has met our targets for the trading combine. Your subscription has been, what does it say, turned off, and we'll reach out to you for additional details on how to get started. This says, congratulations, your funded account status, right? So this is the type of letter you get from them when you actually pass it, right? So if you look back here, this was received on October 22nd. Now I've received a number of these. These are just the automated process you go through when you complete, but this is what it looks like. All right, so again, let's keep moving. So this is basically a blown up screenshot of this, okay? This is a blown up screenshot of that. So what you want to notice here is that the profit objective of $3,026 was done in 5 trading days. So there's your days completed was 5. Here's your profit average per day. We completed this in the minimum allowed time. No losing trading days during this time. Our winning trade percent was 58%. That, by the way, is high for me. I'm not typically a 58% winning trader. That is a high number for me. Okay, so just understand that. I had a pretty good run at it during this 5-day window. The average losing trade was $64. The average winning trade was $321. That is a reward to risk ratio of 5 to 1. I've highlighted that there because that is super important, right? Managing your risk, maximizing your reward is going to be a theme that you will hear from us here at the Oil Trading Group on a very consistent basis. Our average winning day was actually $605. Now, moving on into the step 2, which was done between October 8th and October 22nd. And if you look here, okay, this is that second step. Now, I tell you here, the start date was October 8th and the completion date was the 22nd. There was a Columbus Day holiday on October 8th, which I did not trade. That was a Monday. And so that bled me over across a weekend. So it actually took me, I don't know, 19 calendar days to finish, but I did it in 10 trading days. All right, so here's the numbers you want to look at here. The profit achieved here was $38.46 in 10 trading days. We completed it in the minimum allowed time of 10 days rather. We had 3 losing trading days, and the winning trade percentage was 36%. And you go, holy cow, you won 36%, yet you still made $3,800 in 10 trading days? Yes. Why? because if you look down there to the reward to risk ratio, our reward to risk is 3.5 to 1. The average winning day was $700. Now, one thing that I want you to notice here is we got perilously close to our weekly drawdown here, right? My low balance here was $49,211, right? That's $211 away from the max trailing drawdown on that particular week. But you know what? We didn't panic. We kept our risk low and we pushed on. And you know what? That's why, here's one of the things that I get from traders here a lot when I talk to them. Well, Jason, I blew out my TopstepTrader combine. Okay, well, how did you do that? Well, I got really close and I thought that I could, I could reduce this and do that and extend out. And I really thought I could. Why are you doing all that? All right. One of the things, and again, you're going to look here, if you look back into this October 22nd, I made $2.60, right? If you look back here, I made $18 and $22 and $18 here, right? One of the I was already over the allotted amount. And so one of the discipline things that they want you to do is they're going to make you trade for 10 days. They're going to make you put a trade on for 10 days, not because they're trying to be pestering you, but they want to see if you can maintain the discipline to keep yourself above water and above that profit target. So if you finished in 3 days, what are you going to do for the next 7, right? They want to see if you've got the discipline to be able to keep your hands out of the cookie jar, even though it's just a simulator, right? There is this psychological desire that when I talk to traders of, man, I want to stack it up. I want to show them that I could make $10,000 in 3 days or 10 days. You know what? They don't care. That is of no interest, right? What they care about is you managing your risk, showing discipline, that you can manage your emotions and you can manage your discipline in these combines, right? That is what's important to them, right? So that was step 2 of the trading combine, right? And so now here's the 3 things that I did to pass this combine. Right? So this is that point where your teacher says, write this stuff down, right? These are the 3 things that I did to pass this trading combine. First thing I did was manage trading risk and I adjusted to the volatility. The second thing I did is I maximized the reward on my winning trades. All too often in my trade room, and it happened again today, we had a trade that we got in from 60, I think it was 61.59, and we were holding on for 60.55, and there was a few times where the market ran back and forth, and I ended up getting stopped out at 55 ticks on a 1-lot trade. Okay, now for those of you that were in there today, you know that it came right back up to one of our levels, that daily structure signal where we started, and it ended up selling off all the way down to the original target that we were looking for. But we weren't able to kind of hang on all the way back up through that initial. But we had 1 lot, 55 ticks, and we were able to maximize our reward. My initial stop on that trade this morning, I think, was 14 ticks. And so if you take 55 and you divide it by 14, that is a 4-to-1 reward to risk ratio, 3.92 to 1 reward to risk ratio, right? And that is the essence of maximizing your reward. All right, the other thing that we did, and none of you are going to like to hear this, I shouldn't say that. There's going to be a handful of you guys in here that aren't going to want to hear this, but when we hit a certain point on the day, instead of continuing to trade, we quit, right? We kept our powder dry and lived to fight another day. And I'm going to talk about the psychology of that here in just a couple of minutes. All right, so we managed risk by adjusting to the increased volatility. So on the chart on the left, okay, I want you to see this is an ES chart, and here this blue line at the bottom is the average true range. The average true range on this chart is this first line, blue line, is 5 points. The second blue line is 10 points. Now these are ES moves, right? So if you have a 2-point ES stop, you are likely going to get triggered even if you are correct about the direction. Even if you're correct, you're likely to get triggered because in some instances on its way up, it was 11 points on these candlesticks, right? This is a 5-minute chart. And so with an 11 points, with an 11-point range on a bar, 2 points, you can get chopped up all day long, right? So when there's increased volatility, one of the things that I did is I just put a simple ATR on my chart, right? And when it was fluctuating between 5 and 10 points, I went from the normal 2-lot trade to the 1-lot trade. And so a 2-point trade stop on 2 lots is $200 on the ES. On 1 lot, you could have a 4-point stop and give yourself enough room, right, to be able to withstand some of the ebbs and flows, right? So if it's going one direction, you could come back and get out relatively quickly at break even. So if it goes down 4 points, you can get to break even pretty quickly, or manage that stop down just a little bit below or above a swing high and be able to do something with the trade like that, right? So one of the things that we did, put the ATR, we began to adjust the stop from 2 points on 2 lots to 4 points on 1 lot. And that increased volatility not only gives you bigger moves backwards against you, but also gives you moves for bigger targets. And we'll talk about that more in just a moment. All right, so again, managed risk during this increased volatility. One of the things we just talked about is reducing lot size. And if you look here, the average losing trade was 5 ticks on the ES, and it was 6 ticks, 6.5 ticks, 7 ticks on the CL. So again, what we did is reduce the lot size. When the market moved in our favor, we moved that trailing stop more quickly than normal to be able to protect the risk. So when the downside, the potential for upside is a double-edged sword. When you have big upside, you have big downside too, right? You can have big risk and you can have big reward. So if you're keeping that risk in check, remember, that's the most important thing for them at TopstepTrader is managing your risk. The number one job of professional traders, not to make money, it's to preserve capital. Your number 2 job is to make money. And when you can have an average losing trade of 5 ticks on the ES and 6 ticks on the CL in these kind of wild swings, you're managing risk in the right way. All right, so manage risk, adjust to the increased volatility. And again, the next thing that we talked about is maximizing your reward. And so if you look here, the average winning trade was $321. And that is 5 times greater than the $63 of the losing trade. So your average winning trade was 5 to 1 reward to risk. Also, if you look here, the average winning trade was 14 minutes, 14 and a half minutes. The average losing trade was 5.5 minutes. Your winning trades were being held 3 times longer than the losing trades. So we've all heard this: cut the losers short, let the winners run. We've all heard that adage, right? And that's exactly what we did here, right? So step number 1, manage the volatility. Step number 2, maximize the reward. Now you're saying to yourself, some of you are saying to yourself right now, well, geez, Jason, that sounds great. I'd love to be able to win more when I win than lose when I lose, but I can never figure out how to do that. And even if I do figure out how to do that, my psychology won't allow me to do it, right? I feel like I got to take that off. It goes 10, this happens. It goes 15 ticks in your favor, and then it comes back to break even plus 1 and takes you out. The next time it goes 15 ticks in your favor, you say, I'm not going to give that back, and you take it off. And it's that time that the trade runs maybe down to these targets that you figured out. A lot of guys that I talk to don't know how to figure out big targets and don't have the confidence to hold on to it when it actually happens. I'm going to show you how we do that. All right, so I'm going to show you this trade. Right, and this is one of the trades that you'll be able to, in fact, October 11th is the trade here. So if you come back to this page that I showed you, I told you I'd be referencing it. You come back here to October 11th. There is a video review. In fact, this video is 9 minutes in length, and I'm going to go through and show you what my thought process was, why I did what I did, and then you're going to get to see the actual trade as I called it live in the trade room in front of a live audience of 200 people, and we actually traded it in front of you, right? But here it is. Here's what it looks like on the chart. So one of the things that we do every day when we sit down is I go through, I have a trade plan, and I have some analysis that we do in the morning. So if you were in our trade room this morning, That's the process we go through. I talk about what I think the market's going to be doing, why I think it's going to be doing it, what the prevailing direction, whether it's long, short, or chop. We have all of these things that we look at, and then we take these decision points or our support and resistance levels, and we use them to get into trades. Now, I will quickly tell you what the history of these levels are. I had a trading mentor that had traded on the floor of the S&P pits for 30 years. He taught me a lot of things about trading, but one of the things that he did is he showed me how to draw these support and resistance levels that he used in the trading room every single day, or his trade on the floor rather, every single day. Once he went from floor to electronic trading, we took that information and we developed this indicator that you see here in front of you. Now, here's what's unique about what we do. I'm going to not only give you an indicator, but I'm also going to teach you how to draw it so you have an idea of exactly why it's doing what it's doing. Now, I can't go into all of the details of this, but what I can do is Roderick's going to throw a link to this page. And if you come down here, there's a market maker level video, and it is about 20 minutes in length. This video will go into detail about the history and kind of give you chart examples in more detail than I'm able to give you here today. But these market maker levels here, that's the backbone of what it is that we do. He's going to send you that link to that, and he just put it in there right now. And you're going to be able to watch that video and have a good understanding of what these levels are all about. Now, I've laid the groundwork to show you this chart. As the market rallied up in here, we came right up here to what we call our structure target. We have a saying in the room that we call kick the signal and pay the target. And what we mean by that is that when you hit one of these signals, it's either going to go to the target above or most days to the target below. One of these two targets is going to be achieved. So when the trade started out and rallied into this daily structure target resistance area, hit that level to the tick, and then did nothing else, right? Immediately started to fall out of that. I got in on one lot when we broke the structure signal. We broke down through it. And you saw me if you were in the room today. I drew it just like this on the trade that we took. Market comes down, pulls back, and then we took off, right? And so we wrote it from this level here to here. It was a $1,437 trade. I started with one lot. I added another lot. And again, you can watch that video on that subscription page that Roderick just threw the link into the main chat window. And this was a trade that we took live in front of our live audience here. And again, we started the trade, like I said, with one ES lot. We used our market maker levels for the entries and the exits. Once the trade began to work in our favor, we added to the position, and it ended up being, think about this, it ended up being a 6-to-1 reward to risk trade, as my first trade started with one lot, and then we added to the position, so the risk was cut down dramatically because the trade was going into our favor. And then, of course, you have a video here where you can watch the explanation of exact detail of why I did what I did and how I got in and what the profit target was and how we achieved that profit target. So that was one trade as an example. Again, we had another 14-point ES trade here. We started this trade with 2 ES lots. Once the market could not make it to the level above and we got this big breakout, right? We broke this point here. I jumped on board the market structure signal. I carried it down to the ES structure extension 1, and we ended up with the 14-point ES trade on 2 lots on this. And again, this is on the 18th here. There's the video here on the 18th. And again, you can watch the actual trade itself. You can hear my explanation. You can watch the trade in its entirety, not in entirety. What I do, if you're familiar with the videos, if you're not, basically what I do is I go in there and I let you see where it is that I get in. You hear me go, okay, I'm in at, my stop is, my target is, and then once we get all that sorted out, we start, I'll put you into the trade. I'll fast forward it a little bit so you can kind of get a feel, put a little music behind it, and then you can see where the targets end up being taken off. And again, if you are in the trade room, you have seen these things live in person in the trade room, right? And so the other thing that I want you to look at and be mindful of is this is exactly what it looks like here in the trade room. So I'm gonna not hit play, but let's see if I can do this and get this. Well, what you see here are the price ladders. Here was, and I told you I was down going into this trade. My UP&L on this particular trade was $1,020, and my P&L for the day was actually $820 because I was down ticks heading into that trade. But this is exactly what it looks like. Price ladders with P&L, trades being called in advance, shown on the screen, et cetera, right? And so you have the ability to do all of that live in front of you so that you could keep up with exactly what's going on a day in and day out basis. And again, if you were in there today, you saw me take a 1-lot CL trade for 55 ticks, and there'll be a video out likely later this afternoon on that particular trade. All right, so in this particular trade, again, we had a 14-point ES trade that we got in off our market maker levels. And the whole point of this discussion is to tell you, once you gain confidence in what you're doing here, these market maker levels become so important. And you remember how I started this morning with this email, or this afternoon with this email that I received 3 minutes prior to us getting started? Thanks again for all you taught me. Hanging on targets have helped me survive a recent week where I was only profitable 25% of the time, right? And she says here, the market maker levels rock, and I simply cannot trade without them. And so let this sink in. She had a profitable week despite the fact that she only was profitable 25% of the time. That's okay, right? Everybody comes in and does their own thing. I'm not, everybody comes in and does their own thing and has their own way of looking at the world. But for her, the market maker levels gave her opportunities to carry those out for big trades, right? Because the one thing that we know for sure is you're not going to win every trade. It doesn't matter what system you have. What keeps you in the game and keeps you consistent and keeps you passing top step trader combines and then making money consistently is if you have the ability to cut the losing trades short and let the winning trades run. So step number 2 to pass this combine was that we took and maximized our trades. All right, so again, you can see all of these videos on that page that I just showed you. And thing number 3 was quitting when I was comfortably ahead. So if you look here, right, day 1, 770, day 2, I was only up $87, but it was towards the end of the session, and I ended up eking out and was fine. 730, 916, 522 for an average of that 5-day window of $605 per day. One of the biggest challenges psychologically for any trader is FOMO, fear of missing out. And this is never more intrusive or pervasive than when the market is expanding every day. The key to consistency is knowing when to stop. As we know, we are not going to win every trade or every day, but one of the biggest blows to my personal psychological capital is turning a nice winning day into a losing day because I got caught up in the wave of emotion. And I know that there are those of you in here that have done just that. You've had a great day and you had a great trade and you're up, let's say 50, 60 ticks. And then you say, man, there's another setup. Let me take it. And then you take it and you lose 25 ticks. And now you're up 35 ticks on where you're otherwise up 60 ticks. And now you don't feel like you've won 35 ticks. You feel like you've lost 25 ticks on the day. So all of a sudden your psychological capital goes from really cool and really good to, God, now I'm mad, right? And you know exactly what I'm talking about. There are many of you that have done this, and I dare say probably every one of you have done it. And so for me and my psychological capital, handling the FOMO is a big challenge when the market is making these big sweeping moves. I have to get up. I have to walk away, right? I have to do something else because I need to be happy with $500-600 on one lot, right? And by the way, this combine was mostly done in one lot trades. Most of this combine was done in one lot trades like we did today, right? So one of my keys to maintaining consistency and the way that I got through this Top Step Trader combine, both steps, was to understand that when I'm up on the day, quit, right? Put the car in the garage and walk away. Live to fight another day, come back tomorrow, right? And those are the kind of things that will help you from a psychological standpoint, right? Those are the kind of things that will help you from a psychological standpoint. Give me 1 second here, guys. Give me 1 second. Okay, sorry about that. All right, so now I did that. Step 1, step 2, I did it in front of the trade room. I had a customer call me and say, hey, Jason, I'm willing to pay you extra money, contract with you. Will you go through a combine with me on the side? Okay. Now, I didn't publish this. This was not done in front of the live audience. This was done with a trader, right, that I did that contracted separately with me to go through that process. Okay. Contracted with me to go through that process separately. So, whoops, slide number 2. Another combine for good measure. Okay. So after completing step 2 of the trading combine, I was contracted by an OTG customer to go through the trading combine with them. And if you'll look here, the start date was October 22nd. The end date was October 29th. I made $3,024 in a minimum of 5 trading days. And this is exactly how we went through the process. 46% winning trades. I was about 3-to-1 reward to risk. We were holding on to our trades 4 times greater than longer than our losing trades. And I did and successfully completed a third combine that I did not broadcast and did not publicize, but did it with one of our customers. We completed 3 combines, 2 step 1 combines, 1 the funded trader prep. So let that sink in for a minute. 3 combines in 1 trading month. And I get people tell me all the time, Jason, I can't pass one. I've tried so many times. We have the formula how to do that, right? We have the formula on how to do that. So remember this slide? Remember what I told you on this slide? 163 people responded to this particular survey, and 129 of them said that they were unable to actually pass the combine and or the funded trader prep, and on average they spent $1,149 per $1,145 per person. So if you say $1,145 and divide that by 165, that is an average of 7 months that 80% of the people were not able to pass their combine. We successfully passed 3 of those combines with a profit of $9,000 in the month of October. Right? That is, again, $9,000 worth of combines, 2 of which were step 1 and 1 was step 2 in funded trader prep. So don't let anybody tell you it can't be done. Don't let anybody tell you it can't be done, right? It can be done. The ones that you read on the message boards that tell you it can't be done, it's a scam, it's a joke, it's not a scam, it's not a joke. They just don't know how to do it, and they're frustrated because they spent a bunch of money and not been able to successfully go through it, right? That is the issue, right? That is the deal, right? That is the deal.